Welcome to the Master Passive Income Podcast, where we talk about investing in real estate rental properties with a special focus on making enough money so you can quit your job and live the dream life. And now, here is your host, Dustin Heiner.
Hey, what's up everybody? Dustin Heiner here with Master Passive Income, and I'm here to show you how to quit your job by investing in real estate rental properties so you never have to work a job again. Now today, I want to talk about REITs, or real estate investment trusts. They're basically companies. Well, I'll get into that in just a second, but it's a short way of saying a real estate investment trust is a REIT, R-E-I-T. Now, when I first started investing, I thought, I need to find every single way to invest in real estate. So I started buying properties. I started looking at wholesaling. I started flipping. And then I found real estate investment trusts. Now, I'm not going to say they're horrible. I'm not saying that they're really bad or anything like that. What I will say, though, is that real estate investment trusts are good investments, but there are so many other better ways that you can use your money to make way, way more money. But real estate investment trusts are actually good investments in general. Now, there are some bad ones, some better ones, some really good ones. They pay dividend, which we'll get into that in just a second. But what I want to say is that if you're going to be investing in a REIT, why not then think about how to invest in your own company? See, now when you're investing in a REIT or a real estate investment trust, you are investing in a company that invests in real estate. Now, a great thing about that is you can get in with a very low dollar amount, and you actually get a little bit of a dividend. They're like required to give 90% of their income, the profit that they make, they're required to give that to the people that are investors. So that's a requirement, but that's literally all you're going to get. So you're going to get a little bit of percentage of dividend coming back to you. On top of that, you're also going to get a little bit of appreciation or depreciation if the value of the stock goes down. So that's the only benefit, is that you're investing in real estate and you get a tiny dividend at the very end. Let me give you an example. Let's say you're going to buy $10,000 worth of a REIT stock. You're putting $10,000 into a company, into a REIT company that's investing in real estate. Let's say they do really, really well, and they give you a dividend. And after the entire year, you maybe get 2, 3, or 4 dividends, like maybe quarterly, they might give out dividends. You may make $300, $400, at most $500 in 1 year from that $10,000. Now that's a lot. If you make $500 from that REIT, I am going to be very, very impressed. More than likely, from $10,000, you're going to be making around $200, $250 a month. And now what I will say is to encourage you, if you have $10,000 to invest or more, why invest into a company that you have no control over? You only get money dividend once a quarter. You barely get any control over anything. Why not build your own business, which what I've done, which is what I've taught many, many other people to do, is build their own real estate investing business where they buy rental properties and they make $250 a month in passive income. Now, if you took that same $10,000 that you put into a REIT or real estate investment trust and made $200, $300, $400, or maybe $500, if you took that $10,000 and put it into a rental property, which I've shown many, many of my students before how to do this, they buy a property and they make $250 or more every single month. Now, if you make $250 a month, well, after an entire year, that's $3,000 in passive income. Remember, you're already paying for your expenses, your insurance, your taxes, all that's accounted for. Your income is your rents minus your expenses. That profit there is $250 that you're going to be putting in your pocket every single month, and that is $3,000 a year. Now, at best, you might make $500 at a REIT. At minimum, you should be making $3,000 a year from your real estate business that you create. And then you can continually buy more properties and put that into your business. So that's why I do say, if you're going to invest in a REIT, you might be wasting the opportunity of your money. If you bought a property, you would then be able to continue to build that business, make $3,000 or more every single month. And if you had 10 properties, that would be $30,000 a year instead of $3,000, because multiplied by 10, 3,000 multiplied by 10 is $30,000 more a year if you had 10 properties. So that's what I want to show you how to do. But Now, let's say if you are wanting to invest in a REIT, and it's a great option. It's a great option for people who don't want to take the time to build their own business and still diversify their portfolio. And they say, I'm still investing in real estate, which is completely understandable. It's a really good idea to diversify your portfolio into other areas. So the great things about REITs are that you will absolutely get a dividend. Every single bit of profit that the company makes is a dividend. Now, I will caveat and say, if the company is spending money, like let's say they pay their CEO like $1 million a year, well, that's coming out of the profits. So you're not getting that profit. The CEO is getting all that money and you're getting whatever's left over. So that's a negative. Okay, I'll get off the negatives of the REITs. But the positives are you definitely have a much more secure type of investment in a sense. Even though rental properties are secure, you have a security knowing that the the SEC, the Securities and Exchange Commission, they're overseeing these REITs. They're making sure they're doing their business right, or at least as best as they can. And hopefully you're not going to lose your money. That's a great thing. And then you also get the dividends. But with a REIT, what a REIT basically is, you're investing in a company. And then that company is investing in real estate, and you get a percentage profit from the dividends that the company makes. Now, you still own that stock. Let's say you buy $10,000 worth of stock and you get dividends. Well, your stock shares don't go down. It stays the same. You just keep getting dividends. Now, a great thing is you can easily just reapply that or put that right back into your balance. So instead of $10,000 worth of stock, let's say you made $300 in 1 year, it's $10,300 in that REIT stock, so it can grow over time. Now, what I would suggest is that as you're looking at REITs and which one, the real estate investment trust, which one you're going to go with, don't just go with the one that gives the most dividend. You want ones that have a good track record. Historically, over however many years, has a good track record of producing consistent dividends. You might get one that in 1 year gave like 12%. Well, that's great. But what happens the previous, 3, 4, 5 years? Maybe they were giving like 1%. So look for track record on top of that. Another great thing about a REIT is the very low barrier to entry. Like with real estate, you're going to have a lot of money to buy into it, like $10,000. If for all my students, the bare minimum is $10,000. Once you have $10,000, we can get you a property that makes you $250 or more in passive income. But with a REIT, you can buy a single share. Now, you're not going to make very much money at all, but you could buy a single share. Let's say the share is selling for $5 a share. You can spend $5 and buy a share and get a little bit of dividend. You're not going to make very much, but at the same time, you're also able to get in there pretty quickly. Plus, you're also diversifying over a bunch of different types of stocks. You can get 4 or 5 different types of REITs or different companies that have their REITs. That's another way that you can continue to invest in REITs and diversify. Another great thing about REITs is it's very easy to liquidate. Basically, getting your money back out of the REIT, it's very easy to do that. And just like you're selling a stock, you literally click sell and whatever price amount, like if it's a limit order, sell and boom. And as soon as it hits that limit or whatever price that you want to sell it for, boom, it's sold and the money is in your account. So it's very quick and easy to liquidate that money out of the REITs. You can also be investing in commercial properties because of these REITs. So with a single family home, it's not necessarily commercial. I'm not saying that commercial is fantastic or you should go after commercial, but it's just another thought that these REITs go after commercial properties, big apartment complexes, which is great because economies of scale, they have more money from other investors. They can buy bigger properties. So hopefully they can diversify out their portfolio so they make more money every single month, every single year, and the dividends get higher and higher because they have more doors. They have apartment complexes. Another one is that on the REIT, there are no corporate taxes on the REIT. So basically, the money comes into the real estate investment trust, and 90% of that gets distributed to the shareholders, but it's not taxed at the corporate level. So instead of being taxed at the corporate level and then taxed at you, it's only taxed when you receive those dividends. And a big question that you always will ask is, can I lose money in a REIT? Well, here's what I would say about every single investment you're going to do. You can potentially lose money every single time you invest your money. You can absolutely do that. The risks, though, are a little bit lower, much like a regular stock. Like if you're going to buy Apple or GE or GM or a big company like that or Nike, you're investing your money hoping that those companies are going to still do well over the long term and you're not going to lose the dollar of out. So if you put $10,000 in Nike, but then Nike tanks and there's no more money, like if company's gone, there goes your $10,000 because those stock certificates are not worth anything because there's no company. Same thing with the REIT. If you buy $10,000 worth of a REIT and it's completely gone, then there goes your money. But at the same time, REITs, they also they look at the entire market, like how is their business in the real estate market doing? And so if their real estate is not doing well and they're starting to lose money, performing poorly, assets are performing poorly, they're not actually managing the properties right, whatever it might be, that is just like running their business poorly. Like if Nike stopped selling shoes, they would start running their business poorly and stop making money. Same thing with a REIT. If their tenants start moving out, if bad things start happening to the properties, then money starts dwindling up. And so that is how you can actually lose your money. But it's just like another stock, essentially, for you to buy and sell. Very, very quick and easy. Buy the REIT and get back out of the REIT pretty quickly. And with all these great things as well, you do not have a learning curve when it comes to investing in a REIT, like learning how to manage properties, how to find money, how to find the deals, and how to do all that stuff, how to build a business. You don't have to do that. That's why REITs are really good, because a barrier entry is so low, because all you're doing is you're buying into another company who knows all of that stuff already. And so if you are able to do that, where you have all the learning already done, you could jump into it. Now, the returns aren't as great because, like I said, if you invest in real estate, rental properties yourself, you're building your own business, you collect all that money. And so I will tell you that you can make money 6 different ways if you invest in a real estate rental property. And I've done another video. I'll put that link in the show below this, where I talk about the 6 ways and everything about how you make money in real estate rental properties. But I'll quickly go over them. Number 1 is passive income. Every single month with rental properties, we're making $250 or more every single month. Number 2 is equity capture. When we buy the property, we buy it for less than it's worth, and we capture that equity. Number 3 is forced appreciation. We buy the property, we put $5,000 in it, it makes it worth $15,000 more, we make $10,000. Next one is market appreciation. Just over time, we know the market goes up. Another one is tax advantages, where you get depreciation, you write off as business expenses and all that sort of stuff. The last one is a fantastic one that I don't want you to miss out, is the mortgage buy down. If you buy a property with a down payment, the balance of that loan, the tenant is paying for. Just imagine that you buy a house and you buy an investment property and somebody else pays for it for you. Absolutely amazing. So the tenant pays the interest, the insurance, the taxes, the property manager, the mortgage principal, all that stuff. The tenant pays for that because you account for that first. Now, I want to give you my free investing course in the link below. Click the link that says masterpassiveincome.com/free course, all one word. It'll get you my free course teaching you how to invest in real estate rental properties. In my opinion, stay away from the REITs unless you literally want to just give your money to somebody else to manage. But it's so easy to invest in real estate rental properties yourself. And that's why I want you to get started investing in real estate rental properties, because what's going to happen is you're going to make money the 6 different ways, as well as you can pass it down to your kids, as well as so many different other things about it. I quit my job when I was 37 years old because of all the properties I have. I have 30 plus properties now, and my life is amazing, and I want you to have the same thing. So go get that free course, masterpassiveincome.com/free course. Click the link in the description. But you guys are fantastic. Thank you so much for being here. If you need to invest in REITs, do some research, get investing in REITs. Just start investing. Invest in yourself by putting your money in a place that makes more money. All right, guys, Dustin Heiner here with Master Passive Income. I'll talk to you soon.